What up, YouTubers? Welcome back to another episode of Jack of All Trades. I'm here always with Kaylin and my producer Sam. And today we got some interesting things going. I wanted to talk about the little tutorial with TradingView, the platform that I use to do some charting. I figured you guys might like to use that. And then Kaylin started working on some ideas for longer term swings. So I figured we'd discuss that too. Sound good?
Sure. I want to move your mic a bit closer to your face. You're kind of like a little bit underwater sounding there for a second.
Oh, is it? How's this?
That's better, yeah.
Okay, cool. Right. Let's Sam, can we pull up TradingView? Yeah, so this is the service that I use. It's tradingview.com, and I've been using this for almost 4 years now. I'm on so they have different tiers. I'm on the Pro Plus right now, but I started off with the basic. And the basic will give you most of the tools that you need for charting, and that's what I'm going to go through today. And so yeah, so when you first sign up, you're going to get a really kind of intimidating screen like this. You can kind of just ignore that. What you want to do is go to charts, create one. And then by default, it pulls up Apple for me. Cool.
It does that for me too.
Is that right?
Yeah.
It's got this watch list already made for me, which I guess I could start there. So you could create your own watch lists. So I created a list. 30-day trial. No. I guess you only get one list and you can modify it, which is fine. You can just get rid of I don't want any of these guys. I'm not looking at futures, forex. The cool new feature they added now is that you can add these sections that didn't used to be there. So now if I wanted to add a section, let me add some stuff too. Let's put Bitcoin in there. That's cool. So if I wanted to add a section, I could say like crypto.
Cool. I didn't know that.
Yeah, so it's divided now, so which is kind of cool. So you can create these lists, and you can just pop back and forth between your charts.
Yeah.
So yeah, so let's say if we're charting Bitcoin right now, these are the basic suite of tools that you get. Let me close that. So let me see how to. Yeah, so you could get this quick taskbar. So then basically, like instead of having to dig through all these menus, I just kind of add the ones that I use a lot. So I'll add the trend line one. I use horizontal array a lot. I use the fib retracement all the time. Fib extension. There you go. So so those are the tools that I start using I use pretty often. Where's my toolbar? Oh, here we go. It's on the bottom here. So you get a little toolbar like this, and you can start adding a lot of different things to it. So I can add text, call outs, price balloons, a lot of cool stuff. And then so that's just always going to be floating there. So whenever you need it, you could just pull it out instead of having to dig through the menus. Let me pull up another one that I really find useful. Let's see. Here we go. My favorite's a triangle. Yeah, so like if we're gonna chart Bitcoin right now, you could read up here. This is the asset. The time is these are 1 day candles, and so the same thing. Let me see if I can get through this. So same thing. I like to look at. I put the 1 second there, 15 seconds. I don't need the seconds actually. Put the minutes, 15 minutes, 1 hour, 4 hour, 1 day. And then so once you start adding those, they end up on the list too. So you don't have to dig through the menu. You just quickly click whatever time frame that you like. So if I want to look at Bitcoin in the 1 hour, I'll click that, and here it is on the 1 hour. And yeah, so that's just to get really basic and really you can start drawing some trend lines and stuff. So this morning I actually played this breakout here. So what I did was I was on the 1 hour chart, and I noticed that Bitcoin was forming a rising, an ascending triangle with a breakout here. So ascending triangles will usually have a price target that is the stem of the previous triangle. So you can see that. And look, it almost hit it almost exactly. So it's pretty cool. So I played that breakout, and I cashed out somewhere around there. I was getting to the short, but we closed that. We closed that for certain reasons. But yeah, so like this is like really basic. But what I like about this is there's like no end to the amount of customizations you could do. So like I don't like how this triangle looks. So once you click that, you have this menu comes out, and you can alter it any way that you like. So for me, I like the borders not as bright. So I'll change the color. and I'll move down the opacity a little bit so it's like less thing, like it's a little bit thicker line too. And I don't like looking at the background, so I'll probably turn down the opacity on the background very lightly like that. I've changed the color too. It's a horrible color.
I'm the opposite.
So
I have my candles so bright.
I'm sorry?
I have my candles like super bright.
Oh, is that, yeah? Because I think I overly draw, so then I have layers of stuff. So then after a while, if they're all too bright, then I'm looking like a neon light show. So I like it a little bit less gaudy. So the same thing with the trend lines too. So I like making mine yellow. I like making them thick. And then you could have them like dash lines too, or dotted lines, whatever. I prefer straight lines for my trend lines, but I do also like that it's not so bright. So I like to keep it down a little bit. Excuse me, like that too. The other cool thing is like, so by default, these shapes and these things that you draw will show up on other time frames. But you can see that it starts to not make sense in the 4-hour time frame, right? So you can click on this and you can click on the gears again, and you go to visibility, and you can choose exactly what time frames you want it and not want it to show up at. So I obviously don't want this in the months, the weeks, or even the days, probably not the seconds or the minutes. So I'd probably just keep this in like the hours. Or if I wanted to, I could probably keep it, something like 30-minute and above. So 30-minute and above, 1 hour to maybe say 4 hours. So this way, like, it's nice that you can keep your thing clean. So then like 1 hour to show up, 4 hour to show up. Actually, even 4 hour doesn't make sense. So you know what I'll do? I'll change that to 2 hours. Whoa, what happened there? So change that to 2 hours, right? So now in the 4-hour chart, it's nice and clean. I don't see it. But once I go to the 1 hour chart, boom, there it is. So it's a nice little thing that helps you organize your charts. Because what I used to do for like Tesla, so like the Tesla chart here, I'll go on the daily. What I used to like to do is I used to log my buys and sells with these callouts here. So like if I bought or if I sold Tesla there, I'll say I sold 10 shares, right? And I annotate it, but then I don't want this to show up all the time. So then I'll click on the gears and I'll say, you know what? I really only want this to show up on the 12-hour chart and nothing else. So it kind of hides it. And so that way, this is 12 hours. Look at the 12-hour chart. Oh, gotta do some math. Fuck. Hang on.
It's pretty cool. I didn't know you could do that.
Yeah, so if you type in the numbers, it's 72 minutes is 12 hours. Oh, shit. Ah, no wonder. The free version doesn't have the custom intervals. Ah, that's what did it. Yeah, the free one doesn't have custom intervals. So, but anyway, you get the point, though. So I would hide it. I would hide the price, the callouts, within like another hour or something like that. Yeah, it's not gonna let you do. So that's some of the stuff that the free one doesn't let you do, I guess. But yeah, so you could like do different time frames, and you could annotate whatever you want. So let's say I want to hide it in the 1 hour. Then I'll go here and I'll just say it only shows up in the 1 hour chart. And then so if I go into 15 minutes, it's nice and clean. If I go into 4 hours, it's nice and clean. But if I ever want to check back to see, okay, what was my buy or sell order, or what are like these little notes that I have going on, it would just always show up there. So I thought that's kind of cool too. Right. And the other thing is like, the other thing that I like doing is you can compare. These are really awesome. So like if I want to see how the Tesla on the daily compares to the S&P 500, oh, there it is already. So I'll do S&P 500. I'll choose like, you have to play around with these. Some of them, sometimes they don't show up right, but I'll do like a new price scale. And so there's S&P 500 in comparison to Tesla's performance. So you could see like if certain assets are correlated or uncorrelated, right? You could see if there's something happened at this date right here where the S&P took off and Tesla went to the opposite direction. Yeah, so these are really cool. And then to get rid of them, they're going to be here. All your indicators are going to be here in the menu here. And so if I don't want to see it, I'll just click the eyeball. And if I want to get rid of it, I'll just close it. And same thing with settings. If I want to just change the color or something like that, you could change it into different things. You can change it to candles. change it into bars, however you'd like to view it. So this is why I like it. I like it. So it's quite powerful in terms of how what kind of customization it can do. And there's a lot of free indicators too, right? So a lot of people will like use moving averages. So you can go to the indicators. There's built-in ones. So I could just like say moving average. So there's a lot of built-in moving average ones. So you could say I can do like a triple EMA, exponential moving average. And you can go here and customize it. And you could say style. Oh, why is it? This is supposed to be 3. I never used this one before. Sorry. Let me get rid of this one. Find a better one. Let me just do a simple one then. Just moving average. So right now we have a 9-day moving average. We'd probably change that inputs to say, you know, most people do like a 50-day moving average. And there you go. So then now you got a moving average. And I know, Kaylin, you like the, what's it called? The VWAP?
Yeah, just for intraday though, it's going to look messy on the daily chart.
Yeah, I think they got one too, VWAP.
Yeah.
So you could put these into favorites and then keep it there. So I'll turn off the moving average. Yeah, so there's the VWAP. I don't know what kind of settings you could do with it, but there's the things you can customize with it, like thickness of the line and whatnot. Precision. I don't know what these do for, because I don't use VWAP, but yeah, these
VWAP's really only good for intraday. It doesn't really help you on the daily chart.
On the daily, eh?
Yeah.
Okay.
Yeah, see, it basically just runs like right in line with it.
Okay, so that's the cool thing though. So you could turn it off for here, and if you want to do like intraday on the 15-minute, maybe you could turn it back on and see what it gives you.
That'll look a
there you go.
Yeah.
Yeah, so that's what you're used to looking at, right?
Yeah, exactly.
Yeah. So yeah, there's like a whole list of indicators. I mean, the ones that I use, obviously, I like the RSI a lot. I use that.
What do you put for your time frame on the RSI usually? Just the 14 or?
Yes, just the 14. Yeah. I've never changed it. Yeah, I've never changed it. And then you can move it up here. I like to keep the RSI up there and just read the volume down here. A lot of people like using MACD and stuff. Yeah, so see that bothers the crap out of me. That like a purple background with a purple line is just not visible. So I'll do like that, something like that. There you go. Yeah. So like this is a really nice and easy way to get into charting, and it's got tons of tools for like annotations and whatnot, right? So I see Tesla here is kind of forming an ascending triangle. So I'm looking for it to break out probably next week. Yeah, probably gonna break out. Looks like it's gonna break out Monday around the afternoon. And if it follows this chart, it looks like it's gonna go somewhere north of $750. We'll see if that plays. I'll keep the chart here, but looks like target $750 on Monday. But yeah, these candles, like everything is customizable. Like the candles that I have, I don't even use these, use like this. I don't know if it comes with the free one, but you can change the colors. You know, I like if you like something more brighter green outlines, you do that too. Really crazy stuff, right? So you can just change the color of that as well. You know, whatever helps you visualize the charts. And the good thing is, like, so you have the list on this side, and then on here you have some information which they give you, which is awesome. So if you're looking at Tesla, really quickly it'll tell you the you know, the day's range, their price, what it is closed. It'll tell you the daily volume, market cap, shares floated, its earnings, just really quick information. And if you want more, just click financials, and you're gonna get like really cool stuff. You can look at their balance sheet, their cash flow, like really detailed stuff. So you can see what they're looking at, their cash flow. Like, you know, 2018 they made $2 billion. This year they got almost $6 billion cash from operations. There's statistics too, market cap, debt to equity. Like this is a really full suite of software that you can do to like analyze your assets and whatnot. So I just thought it's super cool. And like anytime you want to add a new thing to your watch list, just click that. You could choose stocks, futures, forex, economy. Like I like comparing a lot of stuff to the M2 money supply because it's like correlated to everything right now. So I'll add that. So now I get the M2 money supply, and I'm looking at this, and I can go like, okay, shit, like the money supply March 2020 last year went up almost 25,000. Oh, it's another feature I like using a lot. Just really quickly, if you hold Shift and press down, you can get these measurements in percentages, up or down, and it'll measure bars too. So like if we're looking at the daily and I'm looking at how many bars is over here, you could look, okay, well, in the last 45 days or 45 bars, this is what happened. It'll give you the price action and the percentage. So it's really cool, and it works on the RSI too. So just hold Shift and there's that stuff.
It's handy.
Very handy. Yeah, there's lots of tools. And then, like I said, there's a lot of annotation stuff. Like this one, is it price table, price note? Oh, maybe some of them is paid only, unfortunately. Oh, here we go, price range. So sometimes if I'm just doing research on an asset, I'll click that and I'll want to just keep that range there just to see, okay, well, its average pullback is this. I'll keep that as a favorite, actually. So its average pullback is this, and its pullback here is about 9-10%. I can just keep going back and just keep making these notes. Like, look at this pullback is about 14%, and then and in aggregate, you can look at it all these pullbacks and kind of get an idea of like how this stock price behaves. Yeah, so it's really cool, very, very cool, very, very cool tool. You can set alerts too. I think you've tried this before, right, Kayleen? You could set an alert there by pressing this button, or you can kind of press. So like if I want to buy Apple, but this is too expensive, I'm gonna wait for like a pullback to like $102. So I might set an alert for like 105. Alert Nasdaq for $105.20. And then so when it beeps, when it goes past this area, you're gonna hear ding on your chart.
Yeah, I'll text you and email you too.
Yeah, exactly. So yeah, and then so you can name these charts too. You can share them if you want. It's a really cool ecosystem, but you can name the charts and you can create new layouts. So I think free offers you 12 customizable charts. The other ones you get different amounts, 10 indicators, 4 charts per one layout. But I think free you can make at least a couple of different charts. So there's different reasons for that. Like, so I'll make a chart for like the 1 hours, and I'll make a chart for like dailies, so then they don't kind of screw each other up. And the other thing is you could also change your views. So if you wanted to do split screen, so what I've been doing lately, so that's not for the free ones. Well, I guess if you're not paying, you don't get split screen. but like if you see like my paid plan, like I've got a 4 division here, like that one right there. So I have like the 1 minute, the 3 minute, the 15, and the 1 hour, and that's just strictly for my Bitcoin. And so I can day trade that Bitcoin on just one view, and so it pays to have like larger screens or whatnot. But yeah, I mean this is and there's templates too. There's so much you could play around with, and also I haven't played with it, but Kaylin, you might be able to use this later on. You can use the stock screener.
Yeah, I haven't used the one on here yet. I haven't tried it out.
Yeah, I've only tried it once, but I mean, it looks like it's got a lot of variables that you could change, like income statements, by balance sheet, by margin, performance.
You can paper trade on this too, right?
I think you can.
You got a trading panel there, I think.
Oh yeah, this is integration to paper trading. Yeah, there you go. Oh yeah, that's right. And then they're integrated to Gemini. You can trade crypto. So instead of logging into Gemini and do your trades, you could do it straight on TradingView, which is kind of cool.
Yeah.
Yeah, and then there's Pine Editor
and trade like paper trade.
Yeah, and there's Pine Editor too. So if you know some coding, you can customize your own indicators. I know quite a few people have done that. I have no idea how they do that, but there's an option. And then yeah, so full suite of software. Close that. And just like anything else, if you don't like it, just select and delete. That's it. And then of course you can control Z as well if you just undo it if you made a mistake. Excuse me. But yeah. Oh, check it out. This is Apple. I might play this shit. Look at that. There's a divergence going on.
Oh yeah.
There's a nice little divergence going on. So, and it looks like, so for divergence, I'd wait for confirmation. So we know that there's the the price is making a lower low, but the RSI is making a higher low. So there's a little divergence in momentum, and you see the volume starting to decrease too as the sell-off is kind of slowing down. So I put a trend line there, and if and when Apple breaks this line, it means that this divergence is confirmed and that the trend has reversed, and then so there's more upside. So a lot of times you see divergence and people will get excited, like they'll get in position right here and it'll flop back down. They'll be like, I don't understand why. It's because you never waited for confirmation. This is just the first signal that a momentum starts to reverse. The other signal you want to watch for is a break of prior resistance. And then, yeah, so if it breaks like 124 bucks, that's when you want to get in.
What kind of time frames have you played around with that on? Like, if you tried like divergence, like how low will you go? Like the 1 hour chart, 15-minute chart?
Yeah, I find divergence becomes absolutely useless in like the 1, 3, even the 15 minutes. But anything, but the larger the time frame, the more accurate it is. Like if I see a divergence on like a 12-hour or the 4-hour, I'm like, this is solid. It's just the 1 minute that seem like very erratic.
Right, yeah. Yeah, the 1 minute's chaos.
Yeah, you spend a lot of time there, eh?
Yeah, I used to. I don't anymore. Now I'm all in 3.
That's what got me into a hole, man. I posted up yesterday that I was trading Bitcoin like towards the end of February, beginning of March. I was just in the shitter.
Yeah.
And I realized I was playing shorter and shorter time frames. Like I'm looking at the 1 minutes actively, and I'm like, I never used to do this.
No.
Right. And it's killing me. Like because I'm having to make decisions on this fly, and I'm wrong like every time.
Yeah.
So yeah. So like I took a step back. I'm like, fuck it. I'm just gonna go back to the 1 hour. If I see something in the 1 hour I played, if I don't, I'm out. And then,
yeah. Just do what you know works.
Yeah, and that's what worked today with the Bitcoin. Like I just saw that I saw this really classic rising ascending triangle, and I'm like, it's a classic breakout, and this is the stem, and look at it. It's pretty standard.
Yeah.
So I played that. Yeah.
Perfect. Yeah, it's funny. The swings I'm doing right now, I either play on the 3-minute chart, and the swings I'm looking at are on the weekly chart. It's like almost as far away from each other as you can get.
Nice. Oh, you know what? While we're on the topic of that, it's a good transition to our idea about doing long-term swing trades. This was the one I actually didn't. I did get into this guy on.
Oh yeah.
Yeah, it closed exactly 1859, and I'm so happy about that.
Oh, that's a nice triangle right there too.
Yeah, let me add these. So the monthly is what got me excited because this was the high. It's trending towards the highest monthly close,
right?
And it did the highest weekly close ever by pennies, but by like a nickel. But it was still the highest weekly close ever.
That's really nice. Like right before there, like where you got that spike, and then those 3 red days there, and then that spike up higher. Yeah, that's a really, really strong signal. If you get one of those right, like you almost probably could have bought it like last week.
There, yeah, that's right.
Buy it right on that one. That's perfect right there. Buy that.
Yeah, like it doesn't show up on the monthly, but you're right. When I looked at the weekly, what I realized was it almost looked like where is this tool that I'm looking for here? Whoa.
Well, you can put hearts on your chart.
Oh yeah. So this is what I was looking at. It was looking like almost a cup and handle.
Yeah.
Right, and then you get the little handle there. So I was like, wow, that looks great. I mean, this thing is so prime for breakout. I was just waiting for that close, and you could see that traders are messing with this asset, eh?
Oh yeah.
Like I remember in the closing minutes, like in the closing hour, they're trying to short this thing down, a really low volume, just trying to short this thing down, and they couldn't get it down anymore. You see the all covered right here.
Oh yeah.
Right.
Yeah. As soon as it gets up though, like if it next week, if it gaps up over new highs on Monday, then it'll be pretty confirmed.
Yeah, because you can see like it's spiked up here, and people are like short, cover, short, cover, cover.
Yeah. Well, it's a key level, right? If you're a short seller, you want to short right into the high of day.
Yeah. This is for like people who love adrenaline rushes. This is too crazy for me.
What do you mean too crazy? That's over like a day and a half.
I get like a heart.
Oh my god.
It's a lifetime for you.
If I'm in a trade longer than 3 minutes, I'm bored.
It's a lifetime for you, eh? Look at this. This is probably your kind of play. It's like about an hour. An hour? Yeah, about an hour. Yeah, decent volume. So
I was in a trade for like 20 minutes the other day, and it felt like I spent the whole day in front of the computer.
How'd that one go?
Good. Yeah, that went nice. It's just lower volume. Anytime it's lower volume, they just move slower. Like if I got really high volume, I'm getting, like 3, 4, 500, 1 million shares traded on 3-minute candles. It's just a lot quicker. And those trades are usually like 1 to 5 minutes long. But if you're only getting like 50, 100,000 traded on each candle, then usually it's a half hour or so. Same patterns though.
Yeah, I know we were chatting like for the last 2 weeks. Not only you, but you and the traders that you follow and you know of, they were having trouble trading this market too. Like a lot of them were getting like just smoked.
Yeah. It seems like it's the day one plays because like I don't have we've said a million times, I don't have a locate broker here in Ontario. So
Right.
all those day one plays that everybody gets excited about, you get the stocks that are like 5 million float or whatever, they gap up 50%. Everybody wants to short them, but you need locates for those, right? So all the stuff I play is the stuff from yesterday. So like I'm looking at whatever happened yesterday, I'm trying to short them the following day, so nobody's really paying attention to them, so I can always get shares. But it's all the day, like once you get to that level where you have so much money you're playing with, you can still play the ones that I play, but you're not really going to have the kind of volume that you need to. Like if you're trading 10, 20, 30,000 shares, like I just said, if I'm trading, the 3-minute candles are trading 100,000 shares, like you can't play that because there's just not enough volume for you. So like all those kind of guys, they trade the day one plays because then you're getting like a million or more shares traded on the 3-minute candle, so they can actually get their liquidity. But
Right.
it seems like all last week, like everything was just like going to the moon. It was probably because last weekend they announced the stimulus again, right? So there's just like crazy, stupid buying pressure. Like the one guy I follow said he lost like his max loss he has set in his broker's 100 grand. He lost 100 grand 6 days in a row. And like he does
Oh, is
well.
that right?
Yeah, he very rarely takes losses, and he lost 100 grand for 6 days in a row.
Was that the guy you showed me? Like that was like the final day. He said, "I'm down like 142 grand. I'm gonna take a few days off or some shit."
Yeah, he did it for like a week, and then he's like, "Okay, I think I need to take a breather."
Yeah, it's crazy how that happens.
Yeah, that's what you gotta be. You just gotta be really quick. Like I remember I showed you that. I can't remember the ticker, but I showed you the two charts, right? The way that the two different guys played it on that day one play. The one guy, it was like a pre-market setup. So if like this is kind of your range, the stock opens at the bottom. He shorted up into the pre-market high, and then as soon as it broke, he covered immediately, and it was like $5 or something, and then it went up to $9, and then he re-shorted it and made $3 or $4 on the way down. Where the other guy just shorted into the high and then just held it, and it went all the way up to the top, and then he covered at the very, very top. So it's just anytime you get into those day one like momentum plays where everybody's super excited about it, like rule of thumb is if it goes to new highs, like new pre-market highs, you have to get out because you have no idea how high it's going to go.
So at that time frame, you guys are playing like I guess you're not. Are you setting stops, or is he just kind of watching price action? If it's you're getting out manually.
It depends. I set stops like before I get into the plays. Like I have all my orders out like before the market even open. Like I have all my I'll have like 4 or 5 different shots of however many shares that I want to short into a range, and then I'll have all my covers for each one of those at the same spot, and then I'll have all my stop loss at the same spot, and then I'll have covers all the way down at different levels as well for each one of those. So if it's like 200 shares or 300 shares or whatever, it'll be like 300, 300, 300 all the way up, and then I'll have my stop loss will all be at the same spot, and then for each one of those entries, I'll have a cover attached to it as well on the way down. But if you're playing like those day one movers where you just get those like big spikes, a lot of them happen 8:30, 9 o'clock, stock comes out of nowhere, goes up like 50%, then it's kind of tricky to do that, I think. I haven't played those ones very much because you just can't get shares, but I think you more so just have to like stop yourself out. Like that's why I have like the one hotkey I have is my Shift C, which I have set to close the order and cancel all open orders, which is like my stop loss at market, right? So if anything ever does happen like that, I could just hit that really quick and it immediately just executes the order. So, and I know a lot of the other guys do that as well. Like a lot of them don't really use hotkeys. They'll just have a hotkey for their stop loss, right? Because it's tough when you're playing them, they're moving that quick to try and enter a stop loss. Like, you might have to wait for the market to open, right? And you're watching it, and then if it just tanks, then maybe you want to start shorting on the tank because it's broken a key level, or it might rip up, right? So you can't really enter orders like prematurely on those as well. So it is tough to actually like enter a hard stop. So you just have to, it just comes down to sticking to your rules. And if it breaks your level, you just got to get out.
Yeah, it's crazy how there's so many different styles. Because I see that's too hectic for me. I'm like, I don't want to. I don't want to be there. Like, you know.
It's not bad. I mean, as long as like it's a lot less stressful. Like before I was using like that one specific hotkey, it was a lot more stressful because then I'd have to like, you know, the thing would break my level and I'd really quickly like have to set market, and then I'd like click my number of shares. But like on interactive brokers, I can't remember the order, but it's like if you click your number of shares, if it's like 1,000 share position, and then you hit, you know, buy to cover, then it'll reset itself to like your default 500 shares or whatever, and then you have to click it again. Like, you know, you can just like fumble yourself up. So sometimes like I've done that where I think I've covered the whole thing, and then I'm looking, I'm like, wait, why am I still losing money? And then it's like, because I still have half my position in the thing. So
That's
that was
brutal.
stressful. Once I set up that hotkey, so I know I can just hit that, and instantaneously I'm out of the position. It's not really that stressful anymore, because I mean, even if you're, you know, even on those ones, you're risking high a day. So if, you know, if you're $1 below the highs and you're going to put, you know, however many shares on, if you want to risk $1,000, then you short 1,000 shares and then you cover it if it breaks the highs, then you know what your loss is already. So it shouldn't be stressful. Like you should still know that before you go into it.
Right. Nah. Yeah. I might try it one day because I keep saying I envy the fact you can play like for 15 minutes and that's like your day. Like that's it.
Yeah, it's kind of nice.
Like there's a time limit on your stress.
So you can watch them.
Yeah. I wonder though, what do you think makes the price spike up so quickly? Like, you think there's a bunch of market executes? You know, somebody set up like the night before, just wait. You know.
No, I think it's just hype. Like, because they're so low float. Like a lot of those ones are, you know, they're under 10 million shares, right? So if you're looking at pre-market, like on the 3-minute chart, like sometimes pre-market you're getting like 500,000, 1,000,000 shares traded per candle. Like there's just so much attention on it that, you know, all these people are just really excited about it. And like again, like if you get a low float like junky stock like that, most of the guys that are playing it are, you know, they don't know what they're doing. So if it you know spikes up a little bit, everybody's just going to buy and they're going to chase because they don't know, right? They don't know risk or anything. So they're just buying it as it keeps spiking. And then at the same time, all these guys who are the pros who are putting those like 30, 40,000 share short positions, as soon as it does break those highs, then they're covering hundreds and hundreds, if not millions of shares into that spike, which pushes it even higher, right? So that's why you get those.
That makes sense. That makes sense.
Yeah, it's just about who's playing it, right? Like it's not like it's like an investment stock. Like you gotta remember that most of the people playing like the low float stocks are uneducated people.
Yeah, it sucks that there's platforms like that where they just I think I mentioned it before. Like I was reading, there's a platform where they don't even calculate how much money they can make per client. They only calculate how long the client stays with the platform, because they're like average. They go bust about 6 months from now. So so they know, like, once we get this guy, we only got him for 6 months. You got to milk this guy for as much as possible.
That's funny.
It's such a crazy business, eh?
Yeah, I wouldn't doubt it. That's like the way it always goes. Like if you listen to anybody, it's like everybody loses their first account really quick, and then the time frame to lose your account just grows. Like it was like me. Like I blew my first account in like a month, and then it took me like 5 months to blow my second account, and then it was like 10 months to blow my third account, and then my fourth account just kind of like weathered the storm and then made it all the way back through.
Wow. Yeah, I think my first account might have lasted like 3 months, but it was only because I was playing a bull market and I was mostly long and not short. So like even if I fuck up, I can just kind of wait it out.
Yeah, that's true. I was still all along, but the problem is I was like everybody else, where I was looking at, you know, like, oh, look at all these stocks going up 200%. I can quit my job next week, right? Like that was my mindset. So I was buying all the junk stuff. So if it went down, it just went down and it was gone.
Oh man, that's brutal.
Yeah, that's what everybody does. I think that's what gets most people interested in stocks is the small caps, because they, you know, they see all these crazy runners. Like GME alone probably got hundreds of thousands of people to start trading because everybody hears about it. They're like, oh my god, I can make how much money in 2 days?
Yeah, it's happening in the crypto market too. They call it alt season. So basically, Bitcoin leads the way. It'll do like a rally, like it's doing right now, and let's say it rallies to like 75K and it kind of settles around there. When Bitcoin settles, what happens is the altcoins start pumping. Like people will just go out of their way, see which one's the most low float, like a 10-cent piece of shit, and they'll just like pour money in it, and it'll do like a 5x, and they're like, yeah. Like they don't care
Yeah.
what the project is. They don't read anything into it. They're just like, wow, look at this piece of turd. It's like no one's buying it. I'm gonna put some money in there, and they spread it out. They'll put in like 20 different things and just wait for one to hit.
Yeah, that's risky though, because like none of them could hit, right?
It's
Like
so risky.
it seems like that to me is just complete gambling, because like, you know, what if you spread your money out through 20 stocks, one of them goes up 500%, but you've still lost overall because the other 19 have crashed on you, right?
See, that's the thing. So there's a couple of good traders on Twitter that do only crypto. So the good ones, like they'll do that, but they'll make money because they know when to exit and they'll know kind of how to identify which ones are about to pop.
Yeah,
But people that follow them don't realize that's what they're doing. They just see like, oh, they're buying a shitcoin. Let me buy the same shitcoin, and then yeah, maybe it'll pop, but they don't know to exit after it did like a 3x or 5x, and they'll write that shit back down.
right. I never understood that. Like that's never been the way. Like, even when I didn't know anything, like I was always selling quick, man. Like I never held on, because I was like, oh man, I knew I didn't know what I was doing. So as soon as I had money, I was taking it.
Yeah, no, I think that's a better attitude. Because if you look at the crypto Twitter, it's like it's full of vitriol. Like so, there was this coin recently, ADA. It went from like outside of a top 10 coin to like a top 5. Went from like 15 cents to like $1 in like 3 months, right? During that run up, everyone's like, ADA this, ADA that, yeah, support the project. And now it took like a 20-cent dip, and people are like, fuck you, Charles. Like he's the CEO, right? He's like, fuck you, Charles. You made us promises and it's delayed and you're costing me money. And it's like, I'm like, this thing was worth 2 cents last March, and it's over $1 1 year later, and you guys are bitching at this guy?
Yeah. Well, I mean, the thing is too, like, you know, you gotta look at it realistically. I mean, if a stock's under $10 a share, I mean, most of the time it's probably garbage to begin with. Because if it's that cheap, I mean, it's probably you know, I mean, you know, granted, some companies that go through hard times or whatever, some companies are growing, but I mean, out of the 1,000 quote unquote growing companies that are under $10, there's, you know, maybe 20 of them are actually going to be half decent companies. The rest of them are all just garbage. That's why they're so cheap.
Probably even less than 20. I mean,
Yeah.
remember that company, The Score? It was the Canadian company. They do like sports betting and stuff.
Okay.
They went from like under $1 to $5 recently because they're trying to get listed into the US. And in order to get listed in the US, they had to do a reverse stock split where it's 5 for 1. So every 5 shares become 1, just to get high enough of a dollar value per share to get listed in the States.
Right. Yeah.
So
So companies like desperately do that when their stock price keeps falling. They just reverse split all over and over and over to try and stay on the NASDAQ.
yeah, so like I think that's a great point. Like people got to realize, like just because you see like a stock is like $5-10, you think affordable, but it's not a consumer good. This is not affordable. No. Like,
yeah, like those are the ones where you want to play the patterns, you want to play the momentum. They're not the ones that you want to invest in necessarily. I mean, some of them are, but they're very few and far between.
And I noticed it's like super deceptive too. Like those, like let's say you're paying like a $5 stock. If it goes up 10 cents, it's pretty significant move. If it goes up 50 cents, it's really big move. You know, it's what, 10%, right?
Yeah.
And then so like, but then you see Tesla go up 50 cents or like even $50 and just like, ugh.
Yeah.
Right.
Yeah,
so like
it's the volatility with it too, right? Like, I mean, it's, you know, if you look at a $1 stock, like it's not unheard of for a $1 stock to go to $8 in half a day. I've seen it hundreds of times, right? But you know, for a $100 stock to go to $800 in 4 hours is pretty much not going to happen, right?
Yeah, it's
like that's the attraction, right? Is everybody's looking at it and saying, oh, you know, I only have $1,000 in my account. I could buy 1,000 shares of this thing, and if it goes up, you know, $5, then I make $5,000. But if I put, you know, $1,000 into Apple, then maybe a year and a half from now I'll have $300.
So I wonder though, you think that's a good thing for the health of the stock market? Because like, you know, so one thing that Apple's been smart about throughout its entire history was that they'll always do a stock split, like a 7 for 1, 3 for 1. They always try to keep the price around that $100-200 range to make it accessible, right? Yeah, and then you look at something like Amazon and Google, they're like in the 3,000s. And the problem is like, if you were just like starting out investor, you're just gonna put $3,000 US in one share.
Yeah, buy one share, yeah.
Right. So I don't know if that's healthy though.
Yeah. Well, even like Sherwin Williams is it's like a paint company, and like my sister has a bunch of shares in that, And she was saying like they're doing a reverse split now because their stock price has gone up, like it's like $750 or something now. And like she's had it since it was like 400, but they're doing I think a 4-for-1 reverse, or sorry, just like a normal split, 4-for-1 split pretty soon. Bring the price down to like 200 or whatever, and that's the exact reason why they're doing it, is trying to get more investors.
Yeah, so I wonder if it kills some of the. I wonder, like, are companies doing that, keeping their stock price expensive because they want to weed out certain holders? Like, if you can afford a bunch of shares at like $2,000-3,000, you're probably like a more educated investor. You might long-term holder kind of thing, like for price stability.
Maybe, yeah, to a degree. I mean, like, yeah, like I mean, I do know a lot of people that like still day trade Apple and Amazon and stuff like that. Like, you know, you get to a point where your account's big enough. Like, there's some day traders I know, and like, you know, they have multi-million-dollar accounts, and like they just day trade Apple and Amazon. Like, you know, they do the same thing. They just look for patterns, but they're taking 100-share positions on a $3,000 stock, right?
Yeah,
so
crazy.
You can still do it. It's just like, but that does have a degree to it, because like all those guys started doing the small cap stuff, so they worked their way up to that level where they're putting so much money in the plays that they can't even trade small caps anymore, because they'll just buy the whole stock. Like they'll buy the whole company.
Yeah, they'll move the market, right?
Yeah, exactly.
That guy Madaz, do you know if he trades with leverage? Because he's doing like $1 million, $2 million trades a day.
I don't think so. His account, I don't know.
Just pure cash.
Yeah, I don't know how legit he is, but I know his
God.
his account now is like 14 million or something like that. He started like last year with a $50,000 account. I don't know if it was like a challenge or something. I just figured out who he was like a few months ago.
Yeah.
But it's fun to watch, but like I don't know, his trading style isn't for me. It's too much like, I don't want to call it gambling, because obviously the guy makes money and he's way better than I am. But like, you know, like he posts pretty regularly when he's like, oh, you know, it's down 500,000 or 1 million today and ended up, you know, 500,000 or 600,000. I'm like, man, you know, like, and like, then he'll say his account's like 10 or 12 million. I'm like, so you're telling me you're down like, you know, 10% or 12% of your whole account in one trade, and then you made it all back? I'm like, that's risky. That means you're only, like, in a week, you could lose your whole thing. Like, if you're trading like that, right? In a week, you could blow $10 million.
Yeah, it's not like the typical traders, right? They'll use like 1%, 5% of their whole portfolio. This guy's using like basically the whole thing.
Yeah, like, I mean, like, I know he's been trading like, I think for 10 or 15 years or something. So he obviously knows what he's doing, but like, you know, everybody has a different personality. I couldn't do that. Like, for me to risk like, you know, 10 or 15% of my whole account on one single trade, and then go in big enough on the very same day to try and make that all back and more. Like, you could, if you made two bad decisions like that, you lose 25% of your account in one day, which in that case is like a few $1 million.
Yeah. Oh,
So,
do you know how he did last March when the market crashed? Like during that period.
no, I'm not sure. I know he posted he posted like a month or so, or not even a month, like maybe it was like a week ago or so. He said he started, I think, last March with $50,000 in his account, and he like worked it up to 14 million. But like, I listened to interviews from him from like, you know, a few years ago, and he was still full time. So he's been doing it for a while. I don't know if it was like a challenge he wanted to do, like just to prove something to himself or whatever. But like, I mean, he does well. He makes a lot of money. It just, like, to me, it just seems like it's really sketchy. Like, unless you're, you know, taking a lot of that out, putting it into like actual savings or, you know, real estate or something like that. Like, the way he trades, he really is like a week away potentially from losing every single dollar in his account, which, you know, I can't speak for it. Like I said, he makes hell of a lot more money than I do, but that'd be too nerve wracking for me. Like, I always risk 1% of my account per trade. Like, that's the most I'll risk. So like, you know, if you have, and like 3% on the whole day, that's pretty generic, like rule of thumb for day trading. So like, if you have, you know, if you have like a $10,000 account, say, you risk $100 a trade, and if you lose 3 times in a day, then you just stop and you wait for tomorrow.
Yeah, that sounds pretty typical.
Yeah, that's the way that I trade. I only ever risk 1% on a single trade, and if I lose 3% in the day, then I just stop.
Yeah, it's like I've been like that too. Like I noticed the larger my futures portfolio gets, the smaller my trade sizes get. Like I'm so risk averse now. Yeah, like So Binance, when I first started the account last September, I put in $200 just to play. It was like my fourth account that I've blown up, so I'm only willing to put like $200 in there to play around with it, right? But I was using like 10% of the portfolio, and I was using 100x leverage. So then I was and it worked for a little bit. Like I went from 200 to $1,400 within maybe like 6 weeks.
Okay.
But then as my wallet was getting bigger and bigger, like I realized I stopped increasing the size of my my trades. Like they were basically capped around like right now I'm about 5,000 or 50 contracts, about $5,000.
Okay.
So that's like about average what I'm doing now. Like 100 starts to makes me nervous, even though it's a smaller percentage of my portfolio.
Yeah, that's funny you say that. That's actually something I was talking to my wife about earlier this week. Is like to think about, that's how I'm trying to start thinking of my trades now, is more so in like a percentage basis. Because like, as your account grows, I mean, if you think you're risking $100 a trade, if you grow your account and you grow your account to $100,000, then you're risking $1,000 a trade. Like the number seems really big, because like, for anybody, if you lose $100, I mean, it's like, okay, I lost $100. It's, you can't do that much with $100, but like, if your account grows and you're, all of a sudden you're risking $1,000 and your max daily loss is $3,000, then it's like, you lose $3,000. It's like, fuck, that's like my mortgage money, or what, like it becomes like that was actually a lot of money kind of thing. But on the same token, in listening to so many different traders, like so many people cap themselves because they can't separate themselves from thinking of the dollar as a dollar. You really have to only think of it as a percentage of your account. And the guys I know that have become like exponentially successful, that's a struggle that everybody goes through. And a lot of people, like, it seems like a lot of people really can't get past that. Like I've followed guys who have been trading full time for, 3 years. And 3 years ago, when I was following them, they were averaging, $700 to $1,000 a day. And then I kind of, I stumble across them again now 3 years later, and they're still making $700 to $1,000 a day. Like never really taking losses, doing the same trades. And, I'm in my head, I'm like, man, this guy should be making like 10 grand a day by now. Like, what's going on, right? But it's because they just struggle so much with letting go of the actual monetary value of that money, right? Like it has to just be a percentage, because if you have a $1 million account and you're risking $100 a trade, and you're just limiting yourself. I mean, if you're getting better and better and better, and you're doing it full time, and you can make those trades consistently over and over and over again, then it shouldn't be a big deal, because you're making more than you're losing. Obviously, if you're doing it successfully, then why not still just keep risking 1%? Like, if you've been successful for a whole year and you've grown your account from $10,000 to $100,000, then risking $1,000 it's not a big deal, percentage wise, because that you could make $3,000 the next day, right? So what does it matter? Whereas if you're only risking $100, it's like you're just kind of slowly inching along. You don't get that exponential growth curve.
Yeah, I know. That's exactly where I'm at. Actually, it took me. So I think around December, I started to realize I was doing 20 and 40 contract positions. Mm-hmm. So like 40 would be my max. And after we started this podcast, I had to actively push myself to get used to the 50 number. And now I'm plugging in the 50 number like almost at will now. I just woke up this morning, I saw the trend line just automatically. I was like, all right, 50, let's go. And like knowing that 100 is my max, but it took me like almost 3 months, 2.5 months to get past that barrier. And now I'm stuck at this 50 mark. This 100 thing, I just can't get over it, man. Yeah. Because when I think about it, I'm like, 100 contracts is a $10,000 position. I'm just like, oof, that's a lot.
Yeah. But the thing is, like, I've used $10,000 positions, and I might still only be risking $100 because of how far I'm expecting the play to move, right? So like the dollar size of the position is somewhat irrelevant. It just depends on your risk, right?
It does. And then Binance tells you like in the corner, like what your margin is, right? It used to be like 0.5, whatever. Now it's like 0.2. Like that's my risk. It's like, it's just slowly starting to shrink. I'm like, I have to break through this. I gotta figure out a way to break through this barrier. Because you're right. It is handicapping me right now. Yeah.
And like, I was listening to an interview with a trader who's, he worked his way up to making, $10 million, $20 million, like average every year, just day trading. And that was like the bulk of the whole interview was, the guy was asking him, like, why do you think you're so much more successful? Because everything you're telling me is what I've heard a lot of other people doing. And that was what he stuck on. He just said, I just think that too many guys just get stuck on the money. They don't think of it as a percentage. Like you have to grow with your account. If you know what you're doing and you're growing your account, there's no reason that you should be that attached to the monetary value of the dollar, because you don't want to be taking money out of your account all the time. Like most of these guys, they only take money out if they're like buying a house or something. Like other than that, it stays in there, and they'll take a couple bucks out for their mortgage or for dinner. Like maybe they just pay themselves a few $1,000s a month or whatever for their living expenses, but all the money stays in the account because they want to keep growing with the account, right? And like I see some guys who have been trading for 15 years, and they still say like as soon as like I have a $35,000 account, and as soon as it gets to 50, I take out 15,000, and I just do that all the time. I never go below, like I never go above that, because then I know, and maybe it is a personality thing, but like they'll say, I know me, and I know if I have $100,000 in my account, then if I get like underwater in a position, I'll know that I have all that other size to work with, and I can just keep adding to it, try to bring it down, and then you get in a way worse situation, right? So like there's a lot of self-control that goes in that sense as well, because obviously, if you do have like, think you have a $10 million account, you're down $100,000 or something like that, like you still have a ton of money to play with to try and make that back, right? But as soon as you start doing that, then you can lose everything. So you gotta really stick to your rules. Like that's something you gotta be aware of. But I mean, this guy was talking, and that was the crux of the whole interview, was he was saying that guys just can't let go of the monetary value of the dollar, and they just have to learn to grow with their position. And he said, he's like, I never ever take money out of my account. He's like, if my account grows, if my account grows $100,000, then my risk on every trade increases by $1,000. Like that's just how it goes.
Yeah, it's funny how you got to rewire your brain to this new perspective to be able to trade correctly. I remember like a few weeks ago, because you know how I trade the futures that settles in Bitcoin, right? So my positions are contracts, and then it's not a dollar value; it's like percent. It's like a point whatever value of a Bitcoin, right?
Right.
And then the futures has another option where you could play with USDT, which is a stable coin. So it gives you like the USD value of it. So instead of taking like a point whatever position of Bitcoin, you could literally say I'm putting in $2,000 here. I'm going to play that. And I played that for 2 weeks, and I lost $1,500. Just because I couldn't rewire my brain, because I was already thinking like in Bitcoin terms, and then for some reason when it turned to dollar value terms, it just fucked me right up.
Yeah, it's funny you say that. Like I have like an example for that on my end is like usually the stocks I play like I would say like at the highest I'll go is like maybe $8 or something like that in a stock right now anyways. But it's kind of for the same reason. So like if I look at like a $3 or $4 or $5 stock, then like I don't have to think about it. I just know like, okay, if I short here, and I put my risk there, like that's going to be about, this many dollars lost, because I just know what that is. And I know like roughly what percentage moves they are. And I kind of know what the range is, but like, once you get to like a 10 or a 12 or a $13 stock, then it doubles that, right? So like where I'm so used to seeing like, a 50% or a 50-cent pop, and then I short it, now all of a sudden that turns into $1 pop, right? And then even the range, like if I have a line that I'm going to cut my loss at or something like that, you get a bigger range. So sometimes like it might wick through it a little bit further and stop you out right at the top. And it's a completely different feel, but it's the same setups. You just like, I'm slowly like working my way up in the dollars. Like I started at like the $2, and then once I got really comfortable with those, I kind of worked into the $3, because you have to expand your range on the play, right? As the price gets higher, which is, it seems really simple, but like when you're playing stuff that's that quick, you can't think about it. It just has to be natural.
Yeah, it screwed me up with my equities too, because so I trade two of my heaviest portfolios is Tesla and Xpeng, but their stock prices are polar opposites. Like Tesla's like $600-700 range, and Xpeng's like $30-40.
Right.
And like when I'm playing Tesla, like when I'm setting buy and sell orders, they're like $100, $150 apart. And then Xpeng, and because I've been playing Tesla for so long, when I'm setting orders for Xpeng, I'm not used to like a $2 difference. Like a $30 stock, a $2 difference is like 7-8%, right? Yeah. So I don't realize that I'm setting this too high of a gap percentage wise. Like I'm just still thinking in dollar value terms. And I missed this giant buy order the other day. It pulled down to $25. I was at 24. I'm like, that's not a big deal. It's like $1. It's $1. But no, that dollar was a big difference.
Yeah. Imagine it was a $5 stock and it pulled back $1.
I know, right? Like,
Yeah.
so like, it's crazy how you got to get over those mental things.
Yeah, it's really weird. That's why it's really tough on the day trading side of things, because it happens so fast, right? Like you can't be thinking about it. You just gotta know by feel. You gotta have a good idea how far it's gonna move.
So you're looking at those there's swing trades. Are you looking at it the same way, like low dollar value stocks, or is it a different strategy?
No, I'm looking for stocks that are like ideally a little bit higher. Like I don't really want anything like, I mean, if I see a really good setup, I'll look at something that's like, $2, $3, $4 a share. Cause like, again, like the stuff that I'm playing still, like I'm not looking for a great company. I'm looking for that move, right? I'm looking for the breakout, the momentum, the excitement, and then I'm out. So like all the swings I'm looking for are like, 1 to 6 weeks kind of thing is the time frame I'm looking for. So the company itself doesn't have to be that sound. It's just trying to capture that move. So I'm looking for the same kind of like general parameters, like, low floats, low market caps, like really good earnings, stuff like that. A lot of the opposite stuff I look for my short plays, like I look for high institutional ownership. Like if it has a higher short float, that's good, stuff like that, right? Like kind of the opposite, because I want it to push up really high.
How low of a market cap are you looking at for the swings? Like under $1 billion?
Yeah, I think I actually have my scanner. Yeah, I think I have it set for under $1 billion, but I like ones that are around like 2 to 500 million kind of thing. That's kind of where
crazy how times changed. Like we're looking at companies under $1 billion, like, because they're like nothing, they're like flies, right? Yeah. But just like 10, 15 years ago, like $1 billion used to be a lot. It used to be like this imaginary number. You were a millionaire, there's a big deal. $1 billion was like this, ooh,
Yeah, if you're a millionaire like 20 years ago, you were like the shit.
Yeah.
And now it's like unless you're a millionaire, you're not even considered in this society.
I know, it's like I think as soon as Apple broke the $1 trillion mark for market cap, things just changed. It's like, what? Yeah. $1 trillion? That's like a freaking unicorn number. Like, what?
Yeah, I know, it's crazy. It's just inflation though, right? Everything just keeps moving up. Like 20 years from now, like, a small cap stock might be, 2 to 5 billion market cap. Who knows?
See, that worries me. This hyperinflation thing. We're going to be spending we're getting rid of coins completely. We're going to be pulling like $1,000 bills like we're ballers, but it's worth like $10.
Yeah, exactly. Yeah.
That's going to be crazy.
Yeah, I know.
The money supply expansion thing really has me worried. I remember I was showing you the chart. Like, I really think we're going to have a big collapse like in the 2030s, early 2030s.
Yeah. Yeah, it's tough to tell right now. I got to learn so much more before I start doing all that investing stuff, but that's kind of why I'm still sticking to my realm of just trying to capture those momentum moves, even like now that I'm trying to start getting into swings and stuff.
Yeah, this week should be good though with the stimulus coming out.
Yeah, they approved it like fully now, right?
They approved it fully. Yeah, and I even heard some people got stimulus checks on Friday or last Thursday or Friday. So I don't know if it's from the last batch, the 800 million batch or 800 billion batch, but people are still getting checks.
And that's why everything was spiking up and running all the short guys over.
Oh, I know. And like, I'm looking at
right into the small caps.
Yeah, actually, that's right. You could buy like 800 shares.
Yeah, exactly.
Something.
Yeah.
I'm looking at the on-chain data for Bitcoin. I'm looking at them like, so, because you could see the accounts with like that are holding lots of Bitcoin, like hundreds, thousands, whatever, right?
Right.
And none of those are moving. Some of them are selling. It's the ones holding 0.01 Bitcoin, which is like $500. Like 500 to like $5,000 guys are like just buying it up. And I'm like, you guys are spending your stimulus checks.
Yeah. So funny, man. I love the world. It's hilarious.
Well, somebody posted up a meme not too long ago. They're like, last year, if you got your stimulus, I forgot what was it, in June or May, Bitcoin was like 8K, 9K. If you put your $1,000 in Bitcoin back then, you'd have like $5,000 or $10,000 or whatever it is now. I'm just like,
yeah, so ridiculous.
What a sales pitch.
I know. Whatever. I've been in it for a while, so if they want to keep buying it up, then it's fine with me.
Right, I gotta say though, right now is the danger zone. Because I do some historic analysis. I'm not the only one. A lot of people do, and they're looking at the chart and they're looking at these wallets that have like the low amounts of Bitcoin, like the 0.1s and the ones or whatever. And they're like, when those wallets reach peak, when they reach a peak and the old 10, 100,000 K wallets like are dumping, that's when this whole thing's gonna flip. The bear market's gonna come, because they're like when the little guys start buying, the mania is at its peak, and then it's the moms and the grandmothers, and they're like, you need to watch out.
Yeah, exactly. Yeah, it's the same with anything, right? Like we talked about that last week with the gold and stuff like that. As soon as everybody starts buying, I mean, granted, everybody kind of is already buying, but I think this last stimulus push here is probably going to be the big one that everybody just throws all their last couple bucks into it, and then, like you said, some of those big guys are going to start taking profits.
I think the big guys will start taking profits, but like I watch the news now almost religiously to see what kind of propaganda is happening. And like, I noticed as soon as Biden got into the presidency, you hear them talk about how, oh, Americans need money, kids got to go back to school. They just created this narrative that there's a giant need for these stimulus checks, and lo and behold, they send out these stimulus checks, right?
Right.
And then you would think, as soon as this thing's approved, the news would be like, okay, problem solved. Let's go forward with the economy. What's next? Now I'm starting to see like news about how, oh yeah, America has an infrastructure problem. We have roads that need fixing. We need this. We need that. And then I remember like a few months ago when they're talking about the 1.9 trillion stimulus, there were already Biden was already talking about doing a $3 trillion infrastructure stimulus for the summer. So they're already teeing that one up. They're like, oh yeah, so people got the money they needed, but you know what? America needs money now too, like our buildings and our roads and our highways. And they're gonna give another $3 trillion. It's almost a done deal.
Ridiculous. Just keep the printers rolling, I guess.
And the other thing is like the other thing that went under the radar this week was the ECB, the European Central Bank. They printed another 1.3 trillion.
Really?
Yeah, but this is the thing that I learned recently was that it's not accidental. They're doing this at the same time, because if all currencies are tied to the U.S. dollar, right, in terms of value, and the U.S. prints a bunch of money, then all these currencies get devalued too. So they have to all print. So everybody has to print in coordination. So the money expands the same way. So the trading levels are still about the same.
Yeah, that makes sense.
Right. So like if you think like the U.S. just printed another 1 trillion and that's how much money's in the supply, like no, you have to kind of double that by the other countries in the world too. So
yeah,
the amount of money in the world is just getting crazy right now.
I guess if it all goes up equally, then all it does is just devalue the dollar overall.
Yeah.
Right? But everything, I mean, like look at the housing market right now here in Ontario. Like everything just gets more expensive, but money just you just get more money. Basically, they just keep printing more money, and then everything just gets more expensive.
Assets is the problem. I just saw an article yesterday. They're saying homeowners had their net worth increased by something like 90% in the last 12 months, just from the value of the homes. But renters net worth only went up like 20%.
Oh yeah. Wow. Yeah, we've been looking at houses because we just bought another house, right? But we were looking for a while, and we got pretty lucky actually on ours. But like we were looking at houses around the area here, and like recently there's been stuff for sale for 1.2 and it sells for 1.7, and like stuff for sale for 800 and it goes for 1.3. Like it's insane, and they're having like 30-40 bids like on these houses. Like it's incredible how much these things are going up in value. Like we went to one. It was funny. We went to one, and it was one of those ones where the pictures look like really, really nice, and then you get there, and it's just like, oh good lord. So like we go to this house, and we get there, and it's like it was just like run down. Like the guy had like gutted it, and it wasn't in the photos. So like the whole house was like falling over basically. He'd like ripped out half the inside and didn't put any of it back. So we walk in, we're like, what the hell? Look around, I was like, wow, they're going to be lucky if they can even sell this thing, let alone get what they want for it. It went for, I think, like 300 over asking. And like, it was like literally the house was falling over. Like I'm an engineer. Like we were looking at the foundation. I'm like, this house is literally going to fall over. And it went for 300 over asking. Like all the floors were like sloped in different directions and everything. I was like, holy shit.
So the buyers either got to rip it and build a new one or put in a lot of renovation money, eh?
That's what I figured. But like, even by the same token, it's like, it wasn't like the spot wasn't even that fantastic. Like we weren't even super thrilled about it. We were just kind of like, all right, let's go see it. Cause we were just looking at houses to get a feel. It was like right on like Main Street stuff too. So it was like kind of a busy road, like not a huge lot or anything. And yeah, like it still, if you're going to rip it down, like they're spending $200,000 over asking to rip it down and build a new one. Like that's insane.
Wow. What's the area that you got into? So I want to get, like, you said you got an acre, right? I want to get something like that.
Yeah. I'm not going to say it on here because I don't want everyone knowing where I live.
Oh yeah, no, true. No, that's true. But yeah, I like that you got like a whole acre, because I really want to be fenced off and be by myself a little bit.
Yeah. I'm happy to get out of the city and live in the country, get my ATVs, snowmobiles, all that good stuff.
I know. How close is it? But you're like, you can get, but it's accessible to the highway, or like you can get to like grocery stores. It's okay, yeah.
Yeah, it's only like 10 minutes from downtown, grocery stores and everything.
Oh, perfect. Oh,
yeah.
That's nice. That's a sweet location.
Yeah, man.
Because I'm like, the way I'm looking at it right now, it's just speculation. But if we have the kind of frenzied price increases we have in right now, and everyone's trying to lock in these, what's the mortgage now? Like 2%, 3%?
I think it's gone up
5 year,
like 2.2. I think they increased it to now.
Okay, yeah. So like a 5 years, 2.22, 2.3.
Yeah.
And people are overextending themselves with the down payments. What happens in 5 years? Because there's no way interest rates going to.
I asked our mortgage guy about that because I was curious too. Because I was thinking like, okay, like if like 5 years from now is everybody just going to lose their homes, right? So like I don't know if they have this in the States, but like in Canada they have a thing called like a stress test, right? So basically what it is, I can't remember the exact number. It was like 2 or 2.5% over what you can qualify for. So like let's say the mortgage rates, for argument's sake, right now are 2%, and you get qualified for $1 million mortgage. Then without the stress test, you'd be qualified for like a $1.7 million mortgage. So basically, you can get into the housing market now at 2%, get $1 million home, and then 5 years from now, if the mortgage rates go up to 4.5%, you can still afford your house.
Gotcha.
So that's because that was a big question I had, because I was like, is the market just going to like tank in 5 years when everybody has to remortgage? And he said, no, they qualify you unless it goes over 2.5% increase, then it won't. Like everybody will be fine.
Interesting.
Yeah.
Well, okay, so that means if people keep their jobs, then the market should still be stable. So as long as we're not in a deep recession kind of thing, then we should be okay.
Yeah, exactly. So
interesting. Okay, because I was kind of hoping like 3 to 5 years from now there'd be a little extra supply on the market there. I could, pick something up.
Yeah, I don't know. I just don't know anymore. I'm just gonna buy shit and just assume it goes up eventually.
I was what's that beach way up north? It's like 2 hours drive up north. Pebble Beach, whatever it is.
Sauble Beach.
Sauble, that's it. Yeah, that's it. Yeah, I was there.
You want to go all the way up there?
You know what? I was driving up there and I was seeing signs. You just buy like a plot of land for like $250,000. I'm like, that's so tempting.
Yeah, just build your own house. Just go like full Viking, like live in the woods, cut some trees down.
I just get my solar roof, a little bit of plumbing. Like that's it. I'm good, man.
Just live in the wilderness, live off the land with your Tesla.
Yeah, exactly. Exactly. Live off the land with my Tesla, my night vision. Yeah.
That's the way to do it.
That's awesome, brother. Yeah, you want to wrap it up here today?
Yeah, I think we're good.
Cool. Awesome. All right. Thanks, guys. Thanks for watching, and like and subscribe.